All right. So first question about infinite banking. The question was, how do you determine or handle the documentation for accounting for your infinite banking loan? So I guess, yeah, this makes sense because I think a lot of people traditionally are getting their taxes bundled up. So here's how I do it. As far as writing off my infinite banking loans, I'm not going to play CPA or tax attorney here. If you guys need one, reach out. We can refer you to the folks that I use personally, but I tend to do things that at least I think are at least best practices and the checks the box, but is also least amount of brain damage in the process. So what I typically do is I'll request the statement from the carrier, whether that's PEN or Veritas or Guardian. There are different methods to doing this. Like some of them, I seem to get a better response by email. Some I call. When it's like Guardian, I'll just email Tyler to do it for me. And to what I'm trying to get is that annual interest statement. So when you create your email, and for all you guys should be using ChatGPT to write all your emails, that's the keyword to use. I'm looking for my annual interest statement because this statement is going to come directly from the carrier. And I think it's pretty much gold in terms of sticking that document in the file in case you are ever audited on this stuff. The second part, some people get really freaked out on the documentation. Like technically, you're supposed to use the money that you took from the infinite banking policy to make money. Whether typically what you guys are doing is, you may put $200,000 in your infinite banking policy and take that money right back out, drain out that cash value to go and invest in something. And the business that you're in is you're an investment firm in a way, with or without any type of LLC. LLCs are just for asset protection. I mentioned prior to, I've owned rental properties for years when I first started. Even if I didn't have an LLC, which some people said I was a bonehead for doing, but I always say I wasn't worth anything then. So there's really nothing to protect. So everything I use and I expense to in the pursuit of making money for that little investment firm was tax deductible, or I should write down on my ledger as an expense. So no difference here. Now, you may want to go a step further. And this is just, I think it's a little optional, and write a little memo saying, yeah, we took out this loan at the time of taking out the loan to go and invest it here. Some people will say you have to show the 50 grand that you took out of your infinite banking policy went exactly into this particular deal. And maybe going as far as having wire instructions to do it. And of course, you have your PPM to substantiate this. I think that's a little bit too much. And I think if you were ever to get audited, it's super practical, right? Like not just getting 50 grand and putting it into a deal. You may take 35 grand from your infinite banking policy. You may take 10,000 from your HELOC. You may take 3,500 from your liquidity and savings, right? It's going to come from a multiple of places, but it doesn't take much to pull this stuff together when you initiate the loans, or maybe if you do this at the end of the year. But having some type of paper trail to show this, what it does is, or at least the reason why I do it is, you forget, right? And then you tend to do your taxes 1 or 2 years later. Your tax accountant asks you, and I think everybody should listening, you absolutely should not be using TurboTax or anything out there. A lot of you guys are big kids now, expect to pay more than $1,000 for your tax filings. But I think the whole idea is you make that 2 or 3-fold back at least in terms of tax savings, which you need to get into alternative investments to get the tax benefits to then have the right CPA to get those tax savings for you. So what I used to have before I implemented QuickBooks, which I don't know why I didn't use QuickBooks sooner. It's an amazing program. It's ran by Intuit, I believe, which is actually the same tax software. I think they have TurboTax, but I think they also are the creator of a lot of these commercial tax softwares that a lot of the CPA pros will use too. So it all plays well together, this ecosystem that Intuit has acquired other companies to build. But prior to that, for years, I would just have a simple spreadsheet, and I would have the categories of, I believe, the Schedule E on there. I can't name them off the top of my head, but like business interest, marketing, other expenses. Go look at the Schedule E. And I just had a spreadsheet where I had all the columns. And then I would just make a big list of all the expenses I would have. And in this case, we put a line item for 2023 interest expense specifically from your life insurance policy.